Welcome everyone. Thank you once again for joining us and taking part in our discussion on one of the very important economic indicators. And this time we're going to have a look at the German ZEW economic sentiment. So just to remind you, in case you forgot what it is and why it's important, let me just remind you this leading indicator of economic health. Investors and analysts are highly informed by virtue of their job, and changes in their sentiment can be an early signal of future economic activity. So what we can actually say is that, first of all, the forecast, according to a survey conducted by Bloomberg, is 64.0 in comparison to the previous data, 62.0. Over here, we have a chart that describes how the economic sentiment has been developing during the past year. And it should be noted that economic sentiment surged in December to the highest level since April 2006. That level is, as mentioned, 62.0, rising 7.4 points from November amid fresh optimism regarding economic outlook in 2014. The rise was well above the 55.3 reading estimated by analysts. However, the recent surveys were over-optimistic in the last few months and did not reflect the recent drop in industrial production in October, suggesting GDP will not grow in Q4 as expected, but the survey results show increased optimism for GDP growth in 2014. Let's have a look at what some of the experts are saying about the upcoming data. Right here we have the names of some of the economists as well as the firms that they represent. This was also polled, they were polled by Bloomberg, that also provided the estimates of the respective economists, and of course the overall summary with the median estimate being 64.0. Highest estimate is actually 69.5, a little bit maybe too optimistic, while the low estimate is 57.0. What we're going to actually add is that ZEW's president advised in December report that with respect to year 2014, the surveyed financial market experts are quite optimistic, something that we already told you in the beginning. Despite rather disappointing economic data released recently, the financial market experts expect economic development in Germany and in the Eurozone to improve further in 2014. We also sometimes comment James Picerno. He is editor-analyst at capitalspectator.com, and what he actually says is that the sentiment alone isn't the final word on the likely path of the economic trend, but without a brightening mood, the odds for growth are usually a bit lower. The good news is that the crowd anticipates a modest rise in today's January release. The consensus forecast sees an expectation slice of this ZEW benchmark, economic sentiment, inching higher to 64, and if the predictions hold, this measure will be at its highest level since February 2006. If so, expectations for a stronger run of growth in 2014 for Germany will look a bit more compelling. So it will actually set, let's say, some sort of a tone for Germany's growth this year. Lastly, let's have a look at what some of the Dukascopy community forecasters and traders are saying about the upcoming data release. Well, based right here, you can see that 73 are rather bullish on the economic sentiment and how it is going to impact EURUSD. So they do believe that the economic data will be rather positive, while only 27 believe that the impact will be bearish. What are some of the comments? Well, let's have a look at some of the traders who were optimistic about the impact. For example, Peter44 says we can see new 8-year high in such level we have seen only in 2006 before the crisis, something that we have guys also mentioned before when talking about the data. If the data comes at least in line with expectations, then it will mean that Germany's economy is on the level from 2006, and we should see a nice bullish move. Also, one of the Dukascopy community members, Daddy Pappy, says industrial output increased by 1.8 9% to reverse the two previous negative readings. Trade surplus remains strong with a recent increase to 17.8 billion, and in fact, trade orders increased by 2.1%. So together with the strong growth forecast of 1.7% for 2014 by the Bundesbank, the medium-term outlook continues to look bright. On the contrary, who is a little bit bearish, that is actually Rokalstu. He believes that he does not remember when German economic sentiment was so high as it is predicted to be. Therefore, he does not see any substantial, let's say, fundamentals for this economic sentiment increase, partially due to the history of the sentiment, partially due to the quite strong euro, and thus his vote is bearish. So these were just some of the important fundamentals that I think were necessary for everyone to just remember. And moving on forward, let me welcome Alex to the whiteboard, who will provide us with some technical analysis on what is the likely negative impact on the euro.
Hello, dear guests. So today we are finally having a look at some fundamental data from Europe and not just discussing fundamentals from the United States or data from Canada. And therefore we are glad to provide some insight on what was happening with the EURUSD during the last couple of weeks. First of all, let's have a look at EURUSD chart, 1 week chart. And as you can see, the pair has formed a rising wedge pattern, even though quality and magnitudes are not so high. The pair just breached pattern support last week, suggesting the strength of the bearish momentum, and therefore the pair can actually head towards 200 period SMA, which can be found at 133. Yeah, but in a shorter term, just last week on the 4-hour chart, as you can see, the pair remained under the pressure during the whole week. And on Sunday, after opening at 136.78, the pair was not able to move any higher. And actually, during the couple of days, it has been bounded by 200 period SMA, and since then the pair has been moving downward and even touched an important psychological level, which can be found at 135. Currently, the pair actually is trading at 135.35. Yeah. And when having a look at the 1 minute chart, let's discuss the negative surprise trading strategy. So the potential entrance point can be at the market price, which is, as already mentioned, 135.36 already. Yeah, the potential take profit can be placed at 135.28, just a couple of pips lower from the market price, and actually this level is represented by 2 days low and 4-hour support, so quite a substantial level in the short term. Yeah, well, speaking about the stop loss, we suggest to place it around 4-hour resistance, as well as around 2 days high. And to be more precise, this is a level of 135.59. So the potential stop loss is placed 23 pips above the market price, while the take profit is placed just 8 pips from the market price. Yeah. As an alternative strategy, we can suggest to place the take profit slightly lower, and to be more precise, around weekly support at 135.13, and therefore that will be a range of 23 pips, which will be equal to the stop loss. So when having a look at the sentiment, as you can see, almost 58% of Dukascopy traders are holding short positions on the pair. And when speaking about the CCI index, this single currency is sold in 56% of all cases across the board, while traders are buying greenback in a slight majority of all cases. And speaking about the pending orders, as you can see, just 52% of them in a 50 pips range are placed to sell the pair, while in a longer term, in a 100 pips range, almost 58% of orders are placed to sell the euro against the greenback. Yep, and we're having a look at the market sentiment provided by other market participants. As you can see, that it's not universal, as Wanda and various FX traders are selling the pair in the vast majority of all cases, yeah, while Saxo Bank traders are opening long positions more often than short ones. Yeah. And the last but not least, as always, we are having a look at technical indicators, and it's pretty simple this time, as vast majority of them are sending sell signals, including indicators on the 10 minutes, 30 minutes, hourly, 4-hour, and even daily chart. So therefore, the outlook for the pair in a short, medium, and even long term remains bearish. Yep, so we are having still some 4 minutes before the news release, and I guess that will be all from my side, and I'm giving the floor to Thomas, who will discuss the positive surprise trading strategy, as well as he will have a look at the market reaction. So, welcome, Thomas.
Hi everyone, I hope you're having a good day. So I'll be presenting, as Alex mentioned, a possible positive trading surprise strategy, and that I'll be doing on the Euro-Swiss franc currency pair. And until my screen sharing loads, just let me explain why I chose this pair. First of all, yeah, and what you're seeing, it is Euro-Swiss franc 1 minute chart on the whiteboard. So why I chose Euro-Swiss franc? First of all, because market sentiment is strongly, I'm very sorry, it should be bullish over here, because market sentiment is strongly bullish. 71% of traders are currently long on the pair. In addition to this, 60% of all of the pending orders in 50 pips range around the current market price are set to go long as well. So in case some sort of volatility, there will be additional support, additional pressure for the pair to inch up higher. And besides that, also Swiss franc is being sold in 74% of all of the cases across the board, which in general shows a rather strong bearish attitude towards the pair in the market. Now, what else? So yeah, and Saxo Bank traders actually as well show expectation, which is rather in line with the possible further appreciation of the pair, as 80% of them are long on the pair. So let me put the one which already has no typo. So yeah, currently the pair is trading around the daily R2, and this green light which you're seeing on right over here, it is a part of a 4-hour and 1-hour triangle pattern's resistance. So in my opinion, that would be a rather well stop loss level, which at the moment, take profit level, which at the moment is, let me double check, around 9 pips across above the current market price, and is located at 1.23665. So, and stop loss would be set at the recent dip, which is seen right over here at 1.23537. So we are still waiting the release of the data, as far as I understand, and as we are a few minutes there, a minute. As I can see, the data came out worse than anticipated, right? 61.7, whereas, so I guess it's pretty safe to say we should leave the positions right over now until even the pair goes to the recent dip. So that being said, let's see what we're seeing, right? I really don't think that will, in, let's say, Euro-Swiss franc case, the reaction will be so strong that it would manage to push the pair much lower. So, and if we, let's say, look at the Euro United States dollar, which Alexander was presenting, so we saw that the initial market reaction was a little bit higher. it was actually 12 pips. It seems so, and the take profit was at 35.28. So actually, even the pair went a little bit further. It went as low as 1.3525, and as always, we can see after the reaction some sort of bullishness, as most likely quite a few bears are winding up their positions. It seems that the pair might go back to 1.3535, somewhere around here, and then continue developing in the trend it was showing earlier on, since the results weren't that much worse than actually from yesterday, only just the initial impact due to the different expectations. So I guess that would be all from my side at this point. If anyone has any questions or remarks, feel free to share them. And yeah, I give floor back to you, Gita.
Thank you guys for a great technical analysis. Now everyone, thank you for participating and taking part. I hope you were able to learn something new and have a look at the market reaction with us. But in the meantime, be sure to stay tuned and stay tuned for more webinars from Dukascopy TV.